What's up, friends? Welcome to Web3 Academy, a place for entrepreneurs, creators, and marketers to explore and learn how to use Web3 to transform business models and create thriving communities. Enjoy this next episode. GM. Welcome, friends, to another episode of Web3 Academy podcast. I'm Kyle Reedhead, founder of Web3 Academy. And today we have a very different episode for you than our typical content. So I wanted to do a quick intro before getting into it. First of all, Jay Hamilton, my co-host, my amazing co-host, is not here today because he's in New York City at NFT NYC, meeting many of the members of Web3 Academy and the Web3 ecosystem. So hopefully, Jay, you're having a blast over there. But today it's just going to be myself and Lark Davis. And we're going to go rogue on the show today. And instead of talking about the things we usually do, we are going to dive deep into the state of crypto markets. Nobody tell Jay. I didn't let him know. I'm totally kidding. But second, I want to welcome the Wealth Mastery community to Web3 Academy. I know many of you are subscribers to Lark's Investor Report, and Lark and I are excited to get together and share some long-form content to add to everything that you're already learning inside of his weekly Wealth Mastery Investor Report. For those of you who are not part of Wealth Mastery, highly recommend you check that out. It's in the show notes below, the link to get there. It's pretty incredible. But for the newcomers here on Web3 Academy, we don't typically talk about markets or price on the show. Web3 Academy is really on a mission to help guide entrepreneurs, businesses, and creators into Web3. So what we're doing is like exploring the utility of this space, right? Exploring how to use NFTs, tokens, and Web3 to unlock new value and create thriving communities and build sustainable business models. So if that interests you, Wealth Mastery community, I welcome you to subscribe to our newsletter at w3academy.io. The link is in the show notes below, and join our Discord. Our Discord community is where you can meet and network with a bunch of other entrepreneurs and creators who are either experts in Web3 or are brand new in Web3. And again, we're all just trying to learn together. Finally, one of the reasons Lark and I wanted to do this episode is because in times like this, people become scared. People become angry. People become fearful. In bear markets, when we're seeing our portfolios just go down and down, and we're seeing red in the markets, it's tough time. And social media gets a little bit crazy. People start leaving the industry, and I think in times like this, it's helpful to sit back, take a deep breath and reflect on what the space is and what we're actually investing in and what's all going on here. And so this episode is an opportunity to sort of zoom out and take a look at what's happening from many different angles. I'm talking macro, we're talking fundamentals, technical analysis, so on and so forth, right? And we're going to just get our head on straight so that we can take advantage of the opportunity that is a bear market. Right. Lark and I are both very, very bullish on crypto and Web3 becoming widely adopted and, impactful over the next 5 to 10 years. And we want to make sure that people's emotions during a time like this are not the thing that's pulling them out of the markets. Right. Because that is when you miss the best opportunities, as you're going to learn about inside this episode. So just wanted to welcome everybody to this episode here and just give you some housekeeping on what's going on. But without further ado, here is the episode with Lark Davis. Hello, friends, and welcome back to Web3 Academy podcast. Today, I have a special guest, none other than Lark Davis, and we're going to be talking about the state of the markets in crypto. Hopefully this will be a bit of a bullish session, but I don't know. It might not be. I guess we'll see what Lark has in store for us. But I'll give a quick intro and then I'll let you take things further, Lark. But Lark's a longtime crypto investor, and he's got a passion for helping others. So he was in the space for a while, was making some good money and profits in the space, and decided, hey, I want to educate others and help. So he started a YouTube channel, a Twitter channel. I think his YouTube's at like 500,000 subscribers. Twitter's at like over 1 million, and he has the Wealth Mastery Investor Report, which is basically an investor report that covers everything in crypto, NFTs, and Web3, and how to sort of like, I guess, how to understand the markets, how to understand where to invest, and how to sort of play this space. And it's 2 newsletters that goes out every single week. He's got over 40,000 subscribers on there. It's a pretty amazing newsletter. I don't know when you ever sleep, Lark, because you seem to be doing a lot of things. What do you sleep, or what's going on?
I sleep less with the baby, that's for sure.
Right. And you have a baby. And you
Yeah.
have a baby. Crazy world. But
Uh,
welcome to the show, Lark. I don't know if there's anything else you want to add to your bio there. Did I cover everything?
no, that's a great intro. Thank you.
Perfect. Well, as I mentioned, we're going to basically address the wealth mastery community today. So there's over 40,000 subscribers there. And Lark does YouTube videos, which are usually shorter, and then does these newsletters. And today we wanted to get together and address the community in more of a long form piece of content to sort of, kind of release everything that Lark's got going on in his brain and what he's thinking of the markets right now. And so this will go to the Wealth Master community, but also the Web3 Academy community. You guys are lucky. You're going to get to learn from the great Lark Davis as well. But let's start off how we do all of our podcasts when we interview a guest. We start with the Web3 rabbit hole story. So what was it that got you into crypto or Web3 or Bitcoin or whatever it was? Can you just sort of walk us through, what got you into this space?
Yeah, absolutely. So it's kind of funny, actually. It was, and a big part, it was my mom who kind of, really pushed me towards like, hey, look, you gotta get yourself into this Bitcoin thing. You gotta check it out. You gotta buy some Bitcoin, right? And she hadn't actually bought any Bitcoin yet, but she kind of wanted me to research it a bit and then, tell her about it. But and she started pushing me towards the Steam platform, which I'm not even sure is going anymore. But Steam was basically a place where you could post blogs and get upvoted and make money. It's a pretty cool idea. Made a few bucks on a few posts. And so I used to post there about different stuff, from travel and like reviews of vineyards I had been to, stuff like this, but also a little bit about crypto, right? How to buy Bitcoin, et cetera, et cetera. And I noticed something very quickly, that all the crypto posts were way more popular than everything else. So I started making more of those. And eventually I was like, man, it's taking a long time to write these crypto posts all the time. Maybe I'll just record a video and I can just talk about what I'm thinking about. And so I started posting those on YouTube and then linking them on Steam, because that's where my head was at. Like, oh yeah, post them on Steam and get up votes and get $5 per post or whatever, and now trade that in for Bitcoin, et cetera, et cetera. Sure enough, the posts over on YouTube started doing way better than the ones on Steam, and yeah, that's kind of how I started all the content creation stuff. But the interesting thing is, in terms of getting into crypto, right? It's something I'd kind of had on my radar vaguely for, some years. Remember the first time I talked about it was back in 2012 in my political studies tutor room. It's like, yeah, we were all talking like, yeah, Bitcoin, yeah, future money. Like, yeah, I should probably buy some of that. But beer money for this weekend. Beer money won out, unfortunately. Future Lark did not appreciate that, but that's okay. I'm sure it was good at the time.
So why did your mom come to you and say, look into Bitcoin? Was this like in the middle of the boom or something? Or how did she get across? How did she get onto Bitcoin?
She also kind of been keeping an eye on it for a while. And she had been listening to some different, podcasts and stuff like that, sort of more on like the libertarian anarchist sort of angle with, Bitcoin as freedom money and stuff like this. And people talking about like Monero and stuff. And that was kind of like her interest, and it was privacy and freedom and stuff like that, which I'm also obviously interested in too. And so that's kind of where the spark started, right? To really start to understand the technology and diving into the technology and what's possible with it. And as someone who had been, who had studied in politics, understanding how screwed the world is, it's funny. I did a 5-year degree, got a master's degree in political studies, and I learned enough to know that I never want to have anything to do with anything related to politics, because it's all screwed, it's all corrupt, it's all terrible. And then you learn about Bitcoin, you're like, actually, there is another way. There's another way to the central bank insanity. There's another way to the international corruption of the dollar and all this stuff, and the political bullying that you see the mainstream financial apparatus being used as. Institutions like the World Bank and the IMF, these are criminal gangster organizations. And when you realize that there's an alternative out there called Bitcoin, it's very exciting, right? And that's one of the things that actually keeps me excited about the space, regardless of the price action. Oh, there's lots of money to be made. I love making money. We all love making money. But at the end of the day, you can make money doing a whole lot of stuff. But if you want to make money building, being part of the financial revolution, Bitcoin, crypto, that's where it's at.
So you're in it for the tech kind of guy, you could say.
In it for the tech and the gains. We'll stay both.
In it for the tech and the gain. Perfect. I love it. Well, there's not a lot of gains to be had at the moment. Unfortunately, we've had a rough go over the last, I don't know how long it's been now, 6 months, maybe. I think November was the last top, I believe.
Yeah, the market really rolled over back in was it April? We had that last sort of hurrah as the Bored Ape Yacht Club land sale happened, which drove a lot of interest in the markets in general. Huge, hundreds of millions of dollars for NFT sales, lots of money driven into Ethereum, et cetera, et cetera. But after that, it was just kind of down from there. But it's been on a downtrend, since November, since we hit the top of 69K, obviously. And once we broke the uptrend at 61K, things just been downhill from there. And there's been lots of opportunities amongst that, right? There's been coins that hit, a lot of altcoins hit new all-time highs 2, 3, 4 months after Bitcoin hit its all-time high, right?
Right.
So there has been opportunity within this, but still everything's been on a downtrend. So we've had things pump and then dump, right? Nothing is at its all-time high right now.
Right. So before we get into, we'll get into the whole space, and you're not just looking at Bitcoin, you're kind of, especially in your newsletter, you're diving into all things, altcoins, NFTs, everything. So I think we will get into that, but let's zoom out first. And Lark, I'd love for you to just give us a kind of your overview on the fundamentals of the space right now. So maybe you want to talk about crypto and the fundamentals there, or maybe you want to talk about macro. But what are you seeing just currently, like overall, why this is all happening? And then maybe we'll get into like technical analysis, some on-chain stuff and all those kind of things. But first, just give us like the zoomed out, like macro fundamental view of what you're seeing in the space right now.
Right now, it's all about really the macro scene, right? This is what is driving all markets right now. And unfortunately, crypto has not been an exception to that. In fact, crypto has moved faster and more volatile in many ways than the equity markets. I mean, we see tech stocks that are down as much as crypto, right? So we're trading very much in line with sort of indexes like the NASDAQ 100, which is a very tech-heavy index. So we're seeing that. And of course, the fears in the markets right now are that we're entering, a new Great Depression. This is going to be the recession of recessions, the $1 recessions. And if you look at the stats, things haven't been this bad in the equity markets for over 100 years in many ways, right? Where you got to go right back to the Great Depression to find stats that are this bad. Never has there been a year that started this bad in X amounts of decades. There's the inflation's highest it's been in decades, et cetera, et cetera, et cetera. Mortgage rates are, so the amount of mortgages being taken, lowest in like 30 years or something like that. People aren't buying properties. People aren't buying stocks right now. The bond yields have inverted, which always signals a recession. Inflation's out of control, and the Fed has not been able to rein that in. As we see, the last CPI print in the USA, which of course, the world's biggest market, global reserve currency. It's why we have to talk about US markets, right? I wish we could just talk about New Zealand markets all the time, but US markets rule the world. The dollar rules the world at this time. Inflation did not peak. We had hoped it would in March. In March, we had 8.5. In April, we had 8.3. Everybody thought, well, that's it. Inflation's peaked. The Fed raising interest rates is getting things under control. It's not what happened, because in May, we had an 8.6% inflation, meaning that inflation has not yet peaked. We could have a higher print next month, which would be bad for the markets. If we go from 8.6 to like 8.8, 9%, like equity markets are going to get smashed again. Crypto's going to get smashed again. So that's all out there in the macro scene right now. I think it's definitely going to be a bit of a journey before things start getting better, right? If recession hasn't even officially been declared in the USA, you need 2 quarters of negative growth. That's going to happen in 10, 15 days, something like that. They'll officially declare a recession for US markets unless something dramatic happens between now and then. So all this stuff is weighing very heavily in the markets. People don't want to, spend $100,000 on a picture of a monkey right now. People are more hesitant to buy Bitcoin right now. The smart investors know, we see that, but still people are running away from risk right now. But the hard part for investors is there's not really anywhere to go. You go into dollars. Great. I'm sitting in dollars now. Yeah. But then you have to deal with the 8.6% inflation. This is the thing. Oh, I'm going to run to metals. Well, metals have, been lackluster, let's say, losing their shine, if you will. And everything else is just getting hammered. So, cash is something of a safe haven, very short term, but long term, you're getting hammered by inflation. So it's a tough environment right now for investors to be making money in.
Do you subscribe to this theory that this is kind of the end and this is like going to be as bad as the Great Depression? Like, I understand like all the metrics are pretty bad. But I mean, lately, anytime that happens, the Fed just reverses course and, lowers rates and starts printing money and kind of saves things. Which is some people are in that camp, like, hey, this is going to be short-term volatility. Fed will change their tune soon enough when they have to. They always do. And some are like, no, this is it. They can't figure it out. They can't control inflation. This is just, it's going to run away. Which camp do you subscribe to?
Well, historically, we have definitely seen the Fed step in, but I think right now they have to let markets crash. It's what you're witnessing right now, a controlled demolition of the markets, and the Federal Reserve is the one who's crashing it. So if you're wondering why your portfolio is down, you can thank the Federal Reserve chief, because they are on purpose crashing the markets because they want to try and bring inflation down. They want people to feel economic pain. That's why they're crashing the markets. The markets did get massively overheated because of record money printing and record, low interest rates and all that stuff, basically free money being handed out, and people took that money and speculated like crazy with it. And, you really start to wonder when you hear about stuff like the Great Reset, right? And we're all going to own nothing and be happy. Well, this is a pretty good way for us to all own nothing, is to crash the markets, force everybody into selling their properties, right? That they bought at much higher prices, force everybody into selling their assets. Everyone's backs against the wall. And you have the massive asset managers like BlackRock step in and buy up everything for pennies on the dollar. I would reckon, though, personally, we are going to see some kind of changing in course once the pain gets bad enough. They'll let it bleed out a lot more before it gets better. But we will see them step in, reverse course at some point, because they're simply going to have to, But if they don't, then yeah, worst depression in, long time. We could be in a multi-year bear market that is unemployment could soar and things could get really, really bad before they get any better. So let's hope that's not the case, because as we've seen for all this century so far, the Fed always steps in and bolsters markets. But the question is, what is their ability to do that right now? Obviously, they're raising interest rates. Hasn't fixed inflation yet, so they're going to have to keep raising hard and frequently. And they bought during the COVID situation, they bought, what was it, $7 trillion, $8 trillion worth of mortgage-backed securities and bonds. Well, they're now letting that stuff either expire or actively talking about selling it into the market. Now, they haven't sold it into the market yet, but if they start dumping a couple $1 trillion worth of mortgage-backed securities into the equity markets, when there's no buyers because they've already crashed the market, liquidity's dried up, open interest is at record lows, pessimism's at record lows, that is the straw that will break the camel's back, essentially. Right. That the market will not be able to sustain that kind of sell pressure. So it's up to the hands of the Federal Reserve, unfortunately. I hate to say it. As a Bitcoin investor, how do we get ourselves in a situation where everyone's just waiting to see what the Fed's going to do? But that's where we are.
It seems like Bitcoin is the thing that fixes all this, right?
Yeah.
It allows us to opt out of that system, yet it's still the one thing that's probably, well, not Bitcoin specifically, but crypto in general has done worse than everything else. At some point, that's got to flip, right? It's got to decouple, I guess, is what the term is. I don't know when that happens, but hopefully that happens sooner than later.
We're correlated until we're not. Basically.
Yeah, exactly. What about, okay, so when this happens, I mean, obviously you see all the headlines of like crypto's dead, Bitcoin's dead, it's all going to go to zero, blah, 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 blah. Of course, I don't subscribe to that. Of course, you don't subscribe to that. Can you talk about the fundamentals at all? I mean, like we just saw these crazy crashes in crypto and pieces of the crypto industry are breaking. I wouldn't say it's necessarily crypto itself. It's more the centralized organizations. But can you talk about what's just happened over the last like week or two with these crazy liquidations and Celsius, and what have you seen going on with all this?
So largely what we are seeing, actually, it's pretty interesting, is the crypto industry in a large way just self-regulating, right? We don't have a central bank to bail us out. We're not Wall Street, right? So when the prices go down, they go down. When liquidations come in for whales, they get liquidated. It's on chain, right? There's no mercy. There's no, it's just emotionless smart contracts executing code. Can't repay your loan, you get liquidated for hundreds of millions of dollars in some cases. What we've seen with centralized lenders has been market contagion, basically. And it's obviously very worrying what's happening with Celsius. It's a frustrating situation. It's a very concerning situation. What we saw, of course, the Terra UST collapse, right? An algorithmic based stablecoin that entered into a death spiral, unfortunately. That had contagion right across crypto, where we saw venture capital firms like 3 Arrows Capital going under. We've seen in the last week alone, other centralized lenders coming out and having either huge raises, getting $500 million bailouts essentially from big players like FTX, or just having to stop withdrawals. Another one, I think called Babel Finance, had to do that. So it's a rough situation out there right now. One thing that we've been talking about in the newsletter is just take control of your private keys for a while. Get off centralized platforms, get off the centralized lenders. Maybe get your money out of DeFi for a while. I know there's still some decent options in DeFi, but you don't have to be in that right now. You can, still learn about the platforms, whatever, take notes for later. But we are seeing things breaking right across the crypto space, and DeFi is holding up pretty damn well right now. So that's something very encouraging. It's largely centralized institutions that are having the most problems because they're the least transparent with what they're doing with their funds. Whereas DeFi platforms, something like Aave or MakerDAO, they're just humming right along. They're doing totally fine, liquidating whales without a second thought, because that's what they're designed to do. So we have the tools to make crypto something really, really amazing. And it is really amazing. It is working as intended. The problem is that when you have the prices falling so far, when you have these honeypots, because that's exactly what they are, you have these predatory, ruthless, cutthroat venture funds and hedge funds out here who are playing a very ruthless game right now. They know that there's a whale sitting there with $200 million worth of Ethereum with a liquidation price at X dollars. They're going to hunt that stop because they're going to short the market. When we see big players like Alameda and others doing this, right? Because they know there's an opportunity there. So if they can crash the market enough, get that vault liquidated, cause a further cascade liquidation of falling prices, there's opportunities there for them. So we've been seeing this very ruthless game play out for the last couple of weeks in crypto.
And that's, I guess, easier to do in crypto because it's all open,
it's all
right?
On chain.
And they can see what
it's all on chain. That's it.
Interesting. That's brutal.
It is.
I hate that. But I mean, I think the nice thing is this open, transparent, financial system. Like you said, we don't need bailouts. It all works. It just kind of does what it does. Basically what we've been building over the last, however many years. I mean, it's working, it's doing its job. And then you have these centralized companies, which are not, which is what we've seen back in 2008 and so on and so forth. Like, this is really why this stuff is all getting built out. So I guess long-term, this is sort of bullish DeFi, bullish crypto. Just short term, we're kind of impacted by the macro environment. Is that sort of what you're seeing play out right now?
That's it. The macro environment is dragging everything down. And because of certain mechanisms within crypto, things are breaking, right? And when these things break, they have huge ramifications, particularly now. The thing is, if any of this stuff broke back in November, it would be like nothing. Right. You barely even notice it happened. But because it's breaking now, when the markets are so thin, when the trading volume's down over 50% from the all-time highs, when you have then $100 million Ethereum vault getting liquidated, that has an impact on the market in a way that it wouldn't have back in the day. So, it's all this stuff is breaking when the markets are at their most vulnerable and their thinnest,
right? Which
makes the impact even more pronounced when it happens.
Right. You were in the bear market in the kind of the big dump of 18. Is there similarities here? Is there a big difference, or like, what are you seeing when you compare back to what happened back then?
I mean, emotionally, it's the same ballet of emotions that we always go through in bull and bear markets. Extreme fear. Everybody gets super afraid at the bottom. People capitulate at the bottom, all that kind of stuff, which is some of the data we've seen on chain. We'll get into in a few minutes. But essentially, this bear market is absolutely nothing like the previous bear market. And yet it's the same, right? Because bear markets always have their similar rhythms, right? Of mass capitulation, things breaking, projects going bankrupt, developers giving up and walking away, investors giving up and walking away. And then you have the builders, You have the long-term investors, the value investors, people who stick around, people who know there's still money to be made, even during a bear market. It's just harder to make money, right? Bull market, everyone's a genius. In the bear market, what is it? They say when the tide goes out, you find out who's been swimming naked, something like that. Well, that's what's happening right now in the bear market. But fundamentally, it's just nothing like 2018. Back in 2018, we had almost nothing. It's actually hard for people who've been around the crypto for a year, and you're used to seeing all the NFTs and the NFT marketplaces and the DeFi stuff, and you have 10 different operational blockchains that you can use that all have cool DeFi platforms. You can trade at decentralized exchanges. You can do loans without any intermediaries using these. None of this stuff existed back then, or almost none of this stuff existed back then. We basically had one blockchain that was doing smart contract stuff, and that was Ethereum. We had a couple others that had a few applications, a couple tokens, but they were very, very, very marginal. We had almost no DeFi stuff. There was $1 billion in stable coins back then versus 150 billion now. There's so much more money in the market. There's so much more stuff working. The adoption levels, I mean, my gosh, we've seen adoption absolutely soar in the last 12 to 18 months, like unbelievable stuff. Any one of these stories I've covered in the last year about this bank selling Bitcoin to their customers, this country's adopting crypto, this huge corporation's getting into crypto, et cetera. Any of these stories would have just like broke the internet back in 2018. Now it's like mundane, like, oh, great, another big company is accepting crypto. Who cares, man? We've come so far. Hundreds of millions of people have come in the last few years. Fundamentals are very strong. They've never been better in many ways. We have more stuff working, more options. It's just, we're in a bear market, and the price has come back down crazily to the previous all-time high prices when things were dramatically different. Meaning to me, I feel like we have some good sales going on in the crypto market right now.
I mean, to think 2018, I don't even think we had like Uniswap. We didn't even have a way for you could exchange a token from one token to the other than using like a centralized exchange.
We had we had Ether Delta.
Ether Delta.
Did you have it?
Don't even know what that is.
It was horrific. It was horrific. Ether Delta. It's one of those things. We made jokes about it at the time because it was so damn bad. I mean, Uniswap was just such a breath of fresh air when it became operational. You could just do these simple, easy swaps, and of course, you could also become a liquidity provider. Ether Delta was a nightmare, man. It was terrible. Absolutely terrible.
Well, so that's one of the nice things about this bear market is like, there's still things you can do, right? Like back then it was just like, it was only tokens invested and speculate. That's it. And I mean, the market is still a lot of speculation, of course, in crypto right 100%. Now and DeFi and everything. But like you said, you can take out loans, you can do, yield farming, you can, lend, you can do so many different things right now. There's even like games and things that you can do. So like, there are still users, and they're not necessarily leaving as fast as they were back then, which I think is not a bullish thing, but is a good thing for the industry. At least I think this time around, there's not like, crypto's dead, or this, like, most people aren't uncertain if this is going to stick around or not. I think we all kind of know, like, this is the future. We just got to deal with whatever the heck's going on in the markets right now. So let's talk a little bit about the markets in terms of like technical analysis or on chain. I know you have some charts for us to look at. Why don't you kind of walk us through what you're seeing right now, and then we can dive into some more of the sectors and kind of details afterwards.
Absolutely. Let's go ahead and share my screen here.
So for those on the YouTube channel, you can see this. For those listening on the podcast, we will do our best to explain what we're seeing on the screen right now.
So I'll try to break it down here for you. So there's some really important things I want to highlight, and we'll go through those here. So hopefully it's podcast friendly as well. So I got the Bitcoin US dollar weekly chart open here, and there's some incredibly important things that have happened here. First, of course, we have to talk about is that the price of Bitcoin for the first time in its history went under the previous all-time high. So we can see right here, the previous all-time high for Bitcoin got up to around $20,000 back in late December 2017. Then, of course, just in the last week of trading action, we've had a situation where we actually came back down for the first time to around $17,500. So $2,500 under the previous all-time high. First time in Bitcoin's history. Absolutely unprecedented trading action that we've seen here for crypto, which, as we've explained earlier in this conversation, is related to the macro scene. Macro is absolutely cooked. And this is really showing it. We are in unprecedented times for the cryptocurrency industry, uncharted waters, if you will. Now, at the time of recording this conversation, we have started trading back above the previous all-time high, but we are still under the 200-week simple moving average. That's the blue line on our chart here. Now, the 200-week simple moving average, this is a very, very important line in the sand for the markets. Basically, this has, in every previous bear market, marked the bottom. So when we got down to this level, when we started trading at or near or just under the 200-week simple moving average, that was the time of maximum financial opportunity. And I'd like to say that that is the time maximum financial opportunity again, but with the macro scene being what it is, I think we have to be very, very cautious in the markets right now. I'm in no rush to do anything personally. I have been averaging in, I have been buying Bitcoin over the last week, but I'm not deploying all my capital, right? I think this bear market could last for quite a while, and we could see a lot of unexpected things playing out. So I'm not in any rush, because normally this stuff would get me super, super excited. Like, oh yes, this is the time to go all in. Never go all in, but with the macro scene being the way it is, I think a little bit of extra caution is warranted here. We also see the RSI.
Typically, just a question for you there. Typically, when it goes down below this 200
week moving average,
200 week moving average, isn't this very early in terms of like the cycle? If you look at last cycles, usually it takes, I don't know how many days it is, but I think we're very early for it to reach this. Are we not?
No, we're actually kind of on par with where we would see this happening after a Bitcoin halving. So it's usually
okay
around this time is when you start to get that bottom. If you look back to like 2018, we got there around a similar time post halving to this particular point. But yeah, the question is that actually the bottom, right? Which, with again, so much fear in the macro, so many liquidations still outstanding that could happen, we must be cautious in terms of rushing to make a bottom call, right? There's no point in chasing clout if you're broke. So just take your time, be patient. And yeah, anyway, so the RSI also hit a record low. So this is a good momentum indicator for the markets. And basically, this is the lowest weekly reading we have ever had in Bitcoin's history. Again, a kind of oversold signal that would normally shout like, yes, this is a fantastic opportunity, right? And it is a fantastic opportunity, which is exactly why I've been buying Bitcoin. But again, not going all in here. Just because the RSI is low doesn't mean it can't go lower. Just remember that. Just remember that. Okay, I also want to point this out. See, normally when we'll be looking for capitulation in the market, a sign that the selling action recently has been a potential bottoming moment for the market is a huge spike in volume. Well, we have seen that huge spike in volume, as you can see on the chart here. So this is the week that has just closed. And that was the third highest volume week in the last few years. Last time we had bigger volumes was during the May 2021 sell-off and the 2020 COVID crash. So those both had higher volumes than we have right now. But that's potentially, again, a moment that could really show like, well, maybe we are seeing a bottom or near bottom coming through for the cryptocurrency markets with such strong volume coming in the last week. Because you got to remember, for every Bitcoin that is panic sold, there's a panic buyer on the other end of that trade, right? So it's a lot of people out there believing that crypto is not dead because that volume is indicating people were stepping up to the plate as the market was crashing.
Interesting.
Of course, we have record low fear and greed sentiment. To what extent do you want to give this particular indicator importance or not? If you look at social media, if you look at the comment section, on my tweets, on my YouTube videos, sentiment is absolutely in the gutter. And it's a funny thing emotionally. People tend to get overly bearish near bottoms, overly bullish near tops. Now, I've fallen victim to being overly bullish near tops, without a doubt. But I don't want to become overly bearish near the bottom, right? So you get down to $17,500 the other day, and then everyone in the comment section, oh, Bitcoin's going down to $3,000, Bitcoin's going to zero. It's the same mentality, just in reverse, right? So usually these kind of extreme fear times are times of opportunities. And again, it's not to rush in, take your time, cost average in throughout the bear market, pretty winning strategy. Because I'll tell you what, the people who became millionaires in the bull market, oh, sure, there's always the exception of the random dude who bought, $500 worth of SHIB and then became a billionaire, or the guy who, perfectly bought a Bored Ape, at the right time and then sold it at the perfect time, et cetera, et cetera. But those are the exceptions, right? The most people who got the most gains out of the bull market were people who bought during the bear market. They bought when things were cheap. That's the simple rule of investing: buy low, sell high. It's really that easy. And cost averaging in to top coins during the bear market is going to be a winning strategy for the next bull market when it comes. I also want to point this out. I did mention it very briefly earlier, but we now have 150 times as many stable coins sitting on the market. So back in 2017, when Bitcoin hit its all-time high, there was only around $1 billion of stable coins in the market altogether. It's just USDT and a little bit of, was DAI even available yet? Can't remember. Wasn't much available, basically. Now we have 150 times as many stable coins. Now, what that means is that there's just a lot more money in the market. That's $150 billion sitting on the sidelines right now. That as soon as that money feels like, hey, things are okay, things are better in the market, I'm going to get back into positions, I'm going to go in big. We have $150 billion ready to pump the markets at any given time. So things can move pretty fast when they start moving. That's just one to point out there.
And especially because the market cap of the entire crypto market is now below $1 trillion, that 150 billion is actually a very meaningful amount overall.
Exactly. Very good point. That's like, 15 to 20% of the entire cryptocurrency market sitting in cash right now. That's huge. And then if you look at realistically, probably a quarter of the market cap of the entire cryptocurrency market is sitting in Bitcoin that's not moving. Those are long-term holders, people who have literally not touched their Bitcoin in years. That represents like 12 to 13 million Bitcoin long-term holders. Those guys have no intention of selling anytime soon, if ever. Right? These are long-term holders.
Those are the laser eyes, man.
Absolutely. They create a very, very powerful floor for Bitcoin. Right? So you got to think there's a quarter of the market that's basically illiquid, that's counted as the market cap. We have a lot of Ethereum hodlers that are going to be doing a relatively similar thing. So maybe 30% of the crypto market is not even up for sale. And then 15 to 20% of it's cash waiting on the sidelines that can pump the market at any time. It's a powder keg, right? All we need is the spark to get it lit. Now, we have seen a big uptick as well in interest in people searching for Bitcoin, people searching for Ethereum. The Bitcoin search, actually, the highest has been in 12 months. I think actually the highest has been in probably about 18 months or something like that. Now, to be fair, some of those Bitcoin searches are, is Bitcoin dead? Is Bitcoin going to zero? But people are at least paying attention to Bitcoin again, so that's good.
Oh, that's hilarious.
Now, what's interesting, and again, if we talk about potential market bottoms, capitulations, any of this kind of stuff, normally you'd want to see massive losses coming in, which is a sad thing because, again, the psychological reality is people buy high and sell low. The people who really become millionaires in the market are the ones who buy low and sell high. Now, what we just saw is huge realized losses for crypto. So this is Bitcoin, and this is from a few days ago. So the realized losses have become even bigger since then. Currently, I think we're sitting on around almost $20 billion of realized losses for Bitcoin investors over the last week or so. Wow. So basically, these are people who bought up here. You bought your Bitcoin at $40,000, you sold it for 20. You bought it at $60,000, you sold it for 20. That's big losses right there. So this kind of capitulation of market participants previously has marked low points in the market. As you can see, the COVID crash, we had a huge amount of, and this is in dollar value, right? So in dollar value, this is the biggest sell-off of realized losses ever. But you have to keep in mind, like back in the COVID crash, the price was much lower. So we probably actually did a similar amount, if not more, Bitcoin actually being sold at a realized loss. It's just the price was $3,000, $4,000. So US dollar value terms, it was smaller, but we see the US dollar value terms here being absolutely huge. So again, that's the kind of information that could say, well, maybe the worst of the sell-off's over, at least, if not a bottom starting to form up at some point in the near future. We also do have, of course, all those wild cards, not just the liquidations we were talking about earlier, and there are still a lot of large vaults out there worth hundreds of millions of dollars of Bitcoin and Ethereum in particular, as well as big Solana wallet that could face potential liquidations. But one of the things we always want to watch for too is the miners. Now, right now, Bitcoin miners have sold around 9,000 Bitcoin over the last week or so. These guys got bills to pay. They got investors who are hungry for returns, et cetera, et cetera. They have become forced sellers at a rough time in the market. Bitcoin miners still hold around 50,000 Bitcoin. So if we see markets tanking and these guys need cash, there's a price point that these Bitcoin miners are going to have on their minds. Like, well, if it gets down to X price, we have to sell because we have to pay our investors, we have to pay our bills, we have to buy new mining machines, et cetera, et cetera. So that's a lot of Bitcoin wildcard wise that can still come into the market. 50,000 Bitcoin sold during a market crash. Not good. Let's just say that. And final point before I turn the screen sharing off here is market mentality can really screw you up. You're usually your own worst enemy when it comes to investing, because what happens is the buy high, sell low mentality, right? But really just getting overly emotional about markets, because without a doubt, when Bitcoin was under $20,000 a few days ago, people were panicking. It's going to go to zero. You have to sell now. Now that Bitcoin's back over $20,000, you have to buy now. It's going to $100,000, right? Remove the emotions. The more emotionless you can be as a trader or as an investor, the better you're going to do. People who get caught up in this emotional wave, it's rough. You'll be your own worst enemy time and time again.
I think emotions are easily the hardest thing about investing. At least that's 100%. What I've experienced since getting investing many years ago, is like controlling your mind is just so damn difficult. I mean, it's difficult regardless of investing, but it's so difficult in investing. It's crazy.
Yep. Just to be watching a market crash and just literally just sitting there on your hands going, I'm not going to sell. It's down another 10%. Not going to sell. There. I'm an idiot. Why did I buy this crap? All my money's gone. I'm not going to sell. And then, of course, in a couple of years' time, everything's back to all-time highs and you're a genius again.
Right. Well, and I think, sorry to interrupt your listening, but I just needed to let you know that if you are looking for a job in Web3, or you are looking to hire in Web3, then you are in the right place. Web3 Academy is curating a talented collective of professionals, whether that be developers, product managers, marketers, community managers, the list goes on and on and on. We are curating a group of talented professionals who are enthusiastic and educated in Web3. And we've done this, put them as a group, and we are connecting them to companies who are hiring across crypto and Web3. So if you are looking either for a job, then what you need to do is head to web3academy.pallet.com/talent. And you can create a profile, basically like building a resume inside of there. If you're looking to hire, head to the same link and you can subscribe to that collective. Okay. There are literally people joining this every single day, and you can subscribe to that collective and reach out individually, personally to these people, to experienced Web3 professionals that you can find and fill the positions that you need. So again, just go to the link in the show notes below and you can find the link to get there. But if you're looking for a job or you're looking to hire in Web3, we are connecting the best of the best. So make sure you get in there and you create your profile or you subscribe if you're hiring. Thank you and enjoy the rest of this episode. I think, the most important thing is conviction. Like when you actually understand what's going on, and we talked about this at the very beginning of like why you got into crypto, it's like the price is sort of irrelevant if it's up or down because you believe in what's happening anyway. And I think this is one of the biggest problems I see of people getting in crypto is they just buy it because, I don't know, their friend told them to buy it, but they have no idea what they're investing in. And I think if you just learn what you're investing in, you can have that conviction. These things don't really matter, and you're able to buy when it's low and sell it or hold it when it's high, kind of thing.
100%. And that all comes out of education. You got to educate yourself. And you know what? Here's a little secret for everybody who's still listening to us at this point, is that you are in a bear market. And you know what? It's going to be pretty boring at times. Take this time to educate yourself. Get out there, read about Bitcoin, read about Ethereum, maybe learn a new skill. Hate your job, go learn coding. Guess what? Crypto developers are in massive demand, even during bear markets. We see companies hiring still, the smart companies that didn't, blow all their cash during the bull market on we're all going to a new conference, first class seats for everybody. Woo! And all the money's gone, right? Those guys won't survive the bear market. The guys that will survive the bear market were smart with their cash. They're hiring right now because they understand now is the time to build. Now is the time to capture market share. When your competitors are all floundering because they don't have the money, you build. We see Binance hiring 2,000 people. Yeah, incredible. Insane. Everyone else is firing people. They're hiring because they were smart. They didn't take out multi-$100 million sports center deals and stuff like this. They saved their cash to hire people. And so you're in a bear market, take the opportunity, educate yourself, learn new skills, learn more about charts, learn more about trading, learn about coding, become involved in communities, find edge. Because guess what? Even during a bear market, money will be made. It'll be made consistently, but not by most people. Bear markets are times when it's harder to make money. Bull markets, you can, just throw a dart at a random coin. Chances are you're going to do okay. Not the case now, right? If you're investing in altcoins, it's a much, much more dangerous game. You got to really take your time. What are the tokenomics? What are the team? Does this company actually have the cash on hand to be able to survive a bear market? I just saw yesterday, I think Immutable X, it's a layer 2 scaling solution for Ethereum. They just announced a $500 million ecosystem fund. Those guys have money.
They're maybe they're hiring like 100 people right now, I think.
That's it. Guess what? My money is on those guys surviving the freaking bear market. Right? So you got to look at, when you're looking at the coins and when you're thinking about investing and stuff, do you really think that safe Elon Doge Mars Moon coin is going to survive the bear market? Or is somebody like Immutable X going to survive the bear market who just dropped $500 million on their ecosystem fund and is hiring 100 new developers? I think those guys are more likely to survive the bear market. So now is the time to be smart with your money, not to gamble as much. There is definitely opportunity. There's great trading opportunities. Traders make money every single day in this market. There are still opportunities to accumulate those fundamentally strong altcoins, the ones that will be here in a few years' time. NFT flipping, there are still opportunities. DeFi, there are still opportunities. Although I got to say, if you are getting into DeFi, try to stick with the blue chip protocols, your Wire and Finance, your Aave, stuff like this. We are seeing things break, and there's nothing wrong with sitting out DeFi for a couple of months, missing out on a little bit of interest, but potentially, avoiding protocol failures. So, but there's still opportunities right now in the markets. Main point.
Absolutely. Well, there's so much activity. There's so much innovation, right? Like,
yes,
that's what's going on right now. There's just so much happening still, even though it seems grim to those who are not really in it. Can you talk us through Wealth Mastery Investor Report? So this is something that you put together to basically help the community, help the people who are following on YouTube, help people who are following on Twitter, sort of navigate the space. Because I mean, you just dropped like 5 different sectors, and there's so much that we could be investing in, but it's so much to learn. So can you just sort of talk about what Wealth Mastery Investor Report is, and why this might be something that people want to get into if they want to invest in crypto?
Yeah, absolutely. Basically, what we do with Wealth Mastery is try to find opportunities, because we believe there's always opportunities in the market. And we see this consistently, without a doubt, consistently, there's opportunities in this market. We just covered a token sale over the last couple of weeks. It did a 10x on market debut, 10x in a bear market. All you had to do was deposit some cash in order to take part in that. That's an opportunity, right? NFT flipping, still making money. NFT mints, still making money, right? So we focus on all this stuff, on where the opportunities are in the market. What is the information that you can use as an investor to keep safe and to find ways to make gains? We do all kinds of stuff. We do deep dives on altcoins. And look, I love Jesse. He's the guy who does our altcoin reviews, because he's just absolutely no holds barred, no bullshit. Borderline Bitcoin maximalist, which is in a weird way the guy you want to have reviewing your altcoins, because when he sees the bullshit, he calls out the bullshit. And look, he's not always right, but he's right most of the time. And time usually proves him right, even when I feel skeptical on some of his reviews. Like, really, man? Like, oh, he's like, yeah, really. And then 6 months later, damn, you were right again. So that's, it's not just always about what to invest in, it's also what not to invest in, right? Which is what we talk about with our altcoin reviews. We give no bullshit reviews. Is it good? Is it not good? What's the value of this coin? We do DeFi tutorials showing step by step how to get involved in these DeFi protocols, which is often a big barrier for most people to get involved, right? Like, how do I actually use this damn thing? How do I connect my wallet? What do I do? Well, we do all that stuff as well. The hottest NFT mints, there's so many NFTs coming to the market right now that it's overwhelming. And most of them are absolute garbage. Most of them are money grabs. Most of them are scams. But there is some good stuff coming out too, right? And maybe you're not into NFTs. And if that's not your thing, that's cool. Guess what? There's a lot of ways to make money in crypto. But if you are into NFTs, finding the most promising mints, that's where the money's made, right? You see, like, look at, like, I was a Bored Ape Yacht Club. I think they minted for 0.08 Ethereum, which was like $100 or something at the time. And at the height, recently, 2 months ago, you could trade one for $500,000. Right?
Absolutely insane.
That's where the money's made. You got to get into the mints. That's how you make money on NFTs. And so much more. We break down my portfolio, what I'm doing, week to week to try to, rebalance my portfolio, find tax efficiencies, all this kind of stuff. So that and much, much more. It's just that we're just skimming the top of the iceberg here. But yeah, Wealth Mastery, basically, we try to find edge in the market and share that with our subscribers. So
I think I am obviously a subscriber of Wealth Mastery, which is why we have Lark on the podcast today. I think one of my favorite things too is you just went through some TA, you went through some on-chain stuff, and this is often something that you're sharing inside of the newsletter as well, which is just really good to kind of make you understand what's going on in these markets and kind of keep you up to date on what's happening. So I think I love that. It's every single week. So it's like, and it's multiple times a week too. So you're actually just consistently getting this kind of information, which helps with conviction, right? It helps you kind of understand and stay not crazy, to be honest, in these kind of markets. So I love that. We were talking before the show about something new that you're releasing as well on the premium side. So just for listeners, there's a free side to the Wealth Mastery, which is kind of like takes pieces from the premium side and shares that. So that's great. You can check that out if you're not already a free subscriber. But there's also the premium side, which is a paid service where you get kind of everything that he just talked about. And this is where you really get the meat and potatoes of it all. You even get there's Lark's entire portfolio is on there. You can just see what he invests in. I think that's super, super useful. But you're releasing something else, I think, next week or later this week. You want to talk about that real quick?
Yeah, so we're introducing a new product. Essentially, it's our monthly crypto alpha report. So this is kind of reviewing what are the top opportunities. We talk about a lot of stuff in the newsletter, and sometimes maybe it's even a bit too much. We really like to provide a lot of value with our newsletter, and there's a lot of different facets of the crypto industry we like to cover, right? But it can be hard to keep up with all the information to sort out the best opportunities from what we already are offering as the best opportunities, right? So what we've essentially done is we're making the crypto monthly alpha report. And this is going to basically cover off what we think are the top opportunities right now for investors to find that edge, to make gains during this bear market, right? So we look at what are the best NFT mints that are coming up, right? What's the absolute top ones? We cover those every week anyway, but what's the top one or two that you should absolutely be paying attention to? What's the top DeFi opportunity right now? What's an altcoin to be paying attention to during the bear market, right? What's the top on-chain indicators that you need to know in terms of what the market conditions are doing and what are the risks in the market right now? So that's the kind of information that we're covering in that alpha report. Basically, a nice, concise package of what we believe are currently the best opportunities in the market.
I feel like nowadays this stuff is so important. I mean, back in 2018 or 2017, there wasn't a lot you could invest in. It was like, a few things. Now there's literally thousands of tokens, I don't know, probably hundreds of thousands of NFTs. So to kind of have it all in one place is pretty incredible. Lark, as we wrap up here, I'm just curious, do you have any final advice for the Wealth Mastery community who's been following you and is subscribed to your newsletter, the Web3 Academy community who's kind of learning about you now? Any just final advice for both communities as we make our way into the deep depths of a bear market?
Yeah. Stay involved, stay consistent. It's probably one of the most simple things is just surviving the bear market, right? And because this is what a lot of people don't end up doing. They quit. When the easy money train stops, a lot of people realize they weren't actually investors. They were just short-term speculators. But if you're actually an investor and you actually are starting to understand this technology, the value proposition, what's being built here, you see the direction that crypto is moving in. You understand that we're going to go from the current 2 to 300 million users to 2 to 3 billion users by the end of this decade. And you're actually writing that thesis, then you're gifted right now. Because guess what? Back when Bitcoin was $69,000, oh, the posts on social media, everybody, if only I had bought back then. Oh, look at Solana now. If only I had bought back then. Look at Avalanche. If only I had bought back then. Guess what? You're being given a second chance in the market right now. That's what the bear market is. If you stay here, if you survive, if you consistently invest into the top coins, right? Chances are you're going to come out the other side of this bear market very well prepared for the next bull run and very well prepared to change your financial destiny. So don't give up, stay involved, stay active in the space. The people who quit back in 2018, and there were a lot of them, they quit and walked away forever. Those people missed out on all the gains in the last bull run. Don't let that be you.
I love it. Inspiring, motivational to everyone. Hopefully everyone enjoyed this conversation. Lark, if people want to follow you, if people want to learn from you, where can they go? This is your chance to sort of shill yourself and tell us where we can keep up on all things Lark Davis.
Well, definitely come over to thewealthmastery.io. That's our website. We post a lot of free content there. If you want to sign up for the free newsletter, you can, but we also just post truckloads of free articles over there. You can just go and read and have fun, and like in-depth reviews and stuff, tutorials, all kinds of great stuff. So definitely YouTube as well. So just look for Lark Davis. You'll find me.
Amazing. Well, thank you so much, Lark. I appreciate you for joining us here today and sharing your insights on everything that's going on in this space. It's a crazy space and a crazy time right now. But I think hearing from you and kind of hearing some insights from, this time around and the last cycle, I think it just kind of makes things make a lot more sense and hopefully kind of levels people out. So again, thank you so much for all the work you're doing, Lark, and all the links to everything you just said are in the show notes below. So you can just click there and you can get to all that stuff. But again, Lark, thank you so much and all the best down under in New Zealand.
Thank you. Appreciate it.
Thank you for listening to Web3 Academy. We hope this helps you along your Web3 journey. And if it does, please share this episode and subscribe so you don't miss the next one. By the way, if you have yet to join the Discord community, you are missing out. This is where all the magic happens. This is where we learn, where we ask questions, where we network. You want to be in there. The link to join is in the description below. And finally, a quick disclaimer. Nothing in this podcast was financial advice. Crypto and Web3 can be risky. You can literally lose it all. In fact, if you invest on account of what we say, you probably will lose it all. So don't do that. In all honesty, the point of this podcast is to remove the noise of markets and price and focus on utility and implementation anyway. So you should not take any of this as financial advice. Thank you, friends, and see you in the next one.